Good morning, folks, and welcome to the Short Vol Show live on YouTube. And we are coming into the week and a Monday morning, and you're going to see me talk about something that I talk about a lot, which is weekend effect in the VIX. So what this is there's a noticeable kind of tracking error. There's lots of different sort of tracking error things that affect VIX trading, but one of the most noticeable ones is a thing where like the VIX is a little bit too low than it should be on a Friday around the close, and it's a little bit higher than it quote unquote should be on a Monday morning. And we see this all the time. We've got E-minis up a point, Dow futures up 38 and NASDAQ down 50 cents right now, and the VIX up 38 cents. And it has something to do with the VIX being related to number of trading days, not number of actual days, and the 2 days of the weekend not being trading days. But we see this all the time where it's, the VIX should be flat now or maybe even down with the E-minis up slightly. But it's not, and we see that all the time. It usually corrects itself kind of within the next few hours, but it's just kind of a little tweak in the model, and it shouldn't be surprising at all. You do notice that with the VIX up, UVXY down, the futures now, as we move through the expiration cycle, and we've moved over the weekend another 2 days through the expiration cycle plus today, you're going to see the futures converging a little bit with spot, and thus, even though the VIX up a little bit, UVXY down. I think if you look to VXX, you'll see that down a little bit, TVIX down a little bit. And once again, the reason it's down is because the futures are down. We're getting kind of into the middle of the cycle, so the two futures to my left that I'm kind of highlighting back and forth with my pointer here are kind of have equal weight right now in the as far as UVXY, VXX, TVIX are concerned. But with them down like 10, 11 cents, you're going to have your UVXY down, regardless of what's happening in the VIX, because of course VIX ETPs based on the futures. There is no way to base something actually on the actual VIX. You can't. There's no instrument. So inevitably there'll be some new people on StockTwits today saying, "What a jip! The VIX is up and these are down. This is manipulation." Well, who's manipulating something to do what? There's nothing being manipulated. It's just the futures are down. UVXY based on the futures, it's down. So if you can go on to StockTwits and tell the guy who's saying it's a jip that they don't understand the product, one of the best ways to put it to them is read your prospectus and find out how it actually works. I was thinking, I wanted to do something today to illustrate some of my favorite resources, and so I'm going to do that now. Every morning I get, and you'll get this too, I'm sure you know about this if you are a customer of Tastyworks or Guerrilla Trades. Every morning I get emails from both of them. So let's look at the Guerrilla Trades email today. I think they will forgive me for showing one of their emails to you. Anyways, it's right here. And it says, the week ahead, July 30th, 2018, the major indices had a mixed week, although bulls were glad to see the Dow and the S&P 500 finally recover from the February mini crash. The Dow and small caps lagged behind for the second week in a row. The Gorilla wasn't surprised to see the quick changes in investor sentiment, as the summer earnings season is usually even more unpredictable thanks to the relatively scarce liquidity. Generally speaking, earnings were very strong, but Facebook's record-breaking $120 billion market cap loss spooked investors on a Wednesday, as the health of the high-tech giants, especially the FANG stocks, is vital for Wall Street. The trade war saga saw a surprising but much welcome plot twist as Donald Trump and the European Commission chief Juncker struck a deal. taking a huge step away from an all-out global war. While only a few key economic releases came out last week, the bond market showed a clear trend with rising rates across the yield curve. The president's harsh words with regard to the Fed's tightening policy didn't change the trend, although the flattening of the curve paused briefly. The most awaited durable goods report was in line with expectations, still showing healthy expansion, and the advanced GDP print came in at 4.1%, the highest since 2010. While the headline number was great, it just missed the consensus estimate, and the slightly higher than expected price index also marked some concerns. Weekly jobless claims continued to point to a tightening job market, and although that hadn't translated into rising inflation yet, the Fed will surely keep a close eye out in the coming months. The technical picture remains bullish despite the mixed price action, even though some cracks appeared on the surface of the rally. The major indices are still in clearly advancing trends, being above both their 50 and 200-day moving averages, and the Dow and the S&P 500 hit new 4-month highs. That said, the Nasdaq got closer to the short-term average despite hitting another new all-time high on Wednesday, and small caps are also showing signs of weakness. The Russell 2000 touched its 50-day moving average on Friday, and the benchmark finished the week in the red. The volatility index VIX remained low despite earnings season, and it closed the week near 14, as investors are still confident that the bullish trend will resume even if a correction is just ahead. Market internals are reflecting the recent relative weakness in small caps and tech issues, but the gorilla thinks that the underlying trend is still not in danger despite the divergencies. The advanced decline line continues to drift sideways after its spectacular run, even as advancing stocks outnumber declining issues again by a 3-to-1 ratio on the New York Stock Exchange and by a 3-to-2 ratio on the Nasdaq. The average number of new 52-week highs increased on both exchanges, rising to 93 on the New York Stock Exchange and 105 on the Nasdaq. The number of new lows was stable in the meantime, ticking lower to 40 on the NYSE, but rising to 63 on the Nasdaq. The percentage of stocks above their 200-day moving average declined to 51% after Friday's post-GDP plunge, as the measure continues to show weak participation in the rally. August will kick off with a very busy week for traders, mostly because of a government jobs report and central bank meetings, but some key earnings will also be coming out. Apple and Berkshire are the highlights of the earnings week, and might I add, Tesla. And with only $60 billion missing, the big question is whether or not Apple could finally become the first $1 trillion company. The Fed, the Bank of Japan, and the Bank of England will all hold meetings this week, and that could mean a roller coaster ride for currencies and equities alike, even as only the BOE is expected to hike rates at this time. With the recent mixed price action in mind, the gorilla thinks that either choppy, hard-to-trade week might be ahead. That another choppy, hard-to-trade week might be ahead. So fasten your seatbelts and keep in mind that the trend is still your friend. Stay tuned. All right, and then we got something from Tastytrade, which is we get something every day, and it always says Tom Sosnoff says, but it always comes from Tom at Tastytrade, but it's usually not from Tom Sosnoff. It's usually from someone else, but today it is from Tom Sosnoff, and it says, "What a difference a week makes." We hear that phrase often, but it's usually a meaningless hyperbole. However, last week's chink in the market's impenetrable I'm getting cut sideways here. Armor may finally mean something. Some of the big boys like NFX, FB, and Twitter took decent outsized hits, while Amazon and Google went nowhere on good numbers. Are we about to roll over, maybe? Is all the good news already built in? We know everyone is still long, and the remaining shorts are barely breathing. But if nothing else, last week's tape action is a departure from the buy every dip, and all bad news is good news. The change of sentiment makes the coming week that much more interesting. It's like the market is teetering on the edge. Enough random musings from a trader dork who's hoping for more downside. Let's get back to the important stuff like Des Bryant's tweets, Lindsay Lohan's Instagram photos, and how someone in the royal family messed up again. Damn you, Meghan. So, my commentary is that I like to pay attention to what I hear like non-trading people say during the week. Like if I talk to people that are outside of the trading world that don't trade what they have to say. And it kind of word did get out, it seems, that Facebook and Twitter had bad earnings, and everybody's talking about it. And I worked at a wedding, and people who were trying to pretend they were like stock market savvy were talking amongst themselves and saying, oh, Twitter, Facebook. And actually, someone actually came up to me and said, hopefully you weren't long Facebook. So the man in the street is hearing bad news from the stock market. And I think that it is significant in a way, because the public sentiment is important, and the public all of a sudden hears that the market's doing badly. Now I try to point out to people, well, people hear, oh, Facebook's doing badly, and they think the market's, everything's awful. I try to point out to people that, Facebook's been on a run from like $40, and just in the last year, it's rallied quite a bit. Let's see what we've got. So in the last year, it's given up what it rallied in the last year. But if you look at a 3-year chart, it was down around 80 3 years ago. And so dropping from, 218 to 175 or 178, it isn't the end of the world. I'm right in the way of the chart, of course. Let me just move myself for a second. It isn't the end of the world for Facebook or for the market that it had a little down move. In fact, it was pretty surprising that Facebook, in spite of all that controversy and the testimony before Congress and all that it continued to rally. It's like it shook off everything and continued to rally. So it's not that, bringing reality back to the price of Facebook stock right now is not necessarily a bad thing, in my opinion. So I was looking at some stuff over the weekend, and one of the stocks that I was looking at, this gentleman, Greg Harman's website, Dragonfly Capital website. Let me see, Dragonfly Cap. And he picks out different stocks to look and different trade ideas. I was looking at this news story here. Trade ideas for Monday: Alcoa, Rockwell Collins, Fortune Brands, NASDAQ, and Northrop Grumman. And he listed all these stocks that I think the point of it is that all of these ones, if they break past this resistance level that he's sort of outlined on these charts, I guess except for this last one, then they're going to go higher. And I did pull up Alcoa options, which I wanted to touch on briefly. So Alcoa symbol is AA, and I guess he was pretty bullish on this. If it breaks up a little bit, then it's breaking its downtrend. Was the point? But I wanted to look at options for a second. When I look at Alcoa options, whether prices look expensive or cheap, it has a little bit to do with obviously the price of the stock and the volatility. This is a relatively low vol stock, 33 vol, and stuff looks really cheap to me. 53 days out. If you were going to play that, maybe this is going to sort of come back to the towards 45 maybe, or even 50. The chart that we're looking at here is a 3-year chart. So, but I just wanted to give you an idea of where the stocks come from, etc. But if we go to like a 10-day chart, it's been kind of coming back a little bit. If you think this trend's going to continue, you might look at buying some. I was thinking like 50 days out to September, maybe even just buy the at the money in September calls, $255. It seems it's relatively cheap. $250 lets you control 100 shares of stock, and I might instead of putting a spread on, I might just buy this call and hang out. Look to look to sell maybe a 46 call against it if you get a little move up, or look to turn into a time spread if you get a little move up by selling. Maybe if you bought the SEP 43 call for 250, let's say you could get into it for 250, you might look at trying to sell one of these August 43 calls for 250 on an up move to put the time spread on for even, something like that. Or you could, if you wanted to get a little more aggressive, you could go out to October and maybe buy the 46 call and sell a maybe a 50 call against it. So you've got a $4 spread for $1, and $100 for each one of those spreads, and you can make some decent money to the upside. So it looks cheap enough for me to just buy a call and hang out, I think. If in October, maybe you buy you could buy the 44 call maybe, and hang out. Or, if you want to buy a spread, you could go out further to like Jan and buy the 45-50 spread maybe. So 45-50 spread for $2. So bet 2 to make 3. I'm sorry. Bet 2 to make 3. Something like that. But that's a long time to wait for that to come in, and so I don't know. I kind of like the idea of buying a SEP at the money or October at the money call in this Alcoa and checking that out. All right, let's take a look at our term structure as we move into the week, and for that I'm going to go to VIX Central here, and it's showing VIX Central showing contango at 5.99%. Things were a bit choppy at the end of the week. We lost, we were at 7% at one point last week, but things were a little bit choppy. But this is a trading environment. There's always uncertainty, so we'll have to see what happens going into the week. Like I said, I would think that if E-mini stay positive, that this positive VIX number will erode throughout the day. That, once again, weekend effect as far as I'm concerned. Let's go briefly to barchart.com and see what our friend has to say about correlation. So let's go to Nick, and GDP didn't quite cut it, he says. This is not a correlated market. The dollar is down and crude oil is up, which is normal, and the 30-year bond is trading lower. The financials should always correlate with the U.S. dollar. So pending home sales is out at 10, and loan officer survey. On Friday, we gave the markets an upside bias as all instruments we track were trading lower on Friday morning, and that's usually indicated of upside day. The markets, however, had other ideas, and Dow dropped 76 points. Today, we aren't dealing with a correlated market, and our bias is neutral. So he says neutral on the market today. And indeed, a lot of people went home over the weekend and thought about Facebook and Twitter being down, and there's a little bit of nervousness going on here. We do have Apple earnings coming out tomorrow, and I was doing a little Paycom setup in the most recent video, so check that out. That's a Paycom also coming out tomorrow, and our Twitter spread, Twitter Tesla spread, still on, and I'm going to decide if I'm going to take this off. I'm probably going to take this off right before earnings, so probably on Wednesday I'm going to take this off and put it back on after earnings. And the reason for that is because it makes me nervous. If we go to our Analyze tab here, and it makes me nervous that we're currently at the 88th percentile in options, and and I'm long Vega. I'm long 100 and something Vega. And so if this goes from 88th percentile, which usually on earnings stuff comes in a lot, if September comes in a lot, and if it comes in 20 points, then I lose $2,000 on the Vega move, even if the stock, you know, rallies slightly or goes perfect as far as direction. I've got some Vega risk, so I'm probably looking to get out of this before earnings come out on Wednesday afternoon. Twitter, once again, options look really cheap to me. So if you're thinking that you're going to get a rebound here, you might want to buy something. September, okay, September 34, 35s. You know, you can buy SEP 35s for $200. So that's, you know, you have control of 100 shares of the stock for $200. So that's like you're buying a $2 stock, but it's actually a $34 stock. I think it's a good, if you think that this is going to rebound, yeah, I would consider either buying outright a 35 call or buying something like the 35-40 call spread, something like that. So you buy the 35 for 2, you sell the 40 for 70 cents, and I'm sorry, yeah, and then you're paying $1.30 for this $5 spread, and you can do that a few times and do really well if it comes back in the next 53 days. So take a look at that. Think about it. There's all kinds of other stuff out there. Please list in the comments anything that you are kind of looking at, and we can discuss it. Anyways, have a great week, folks. I will be definitely on tomorrow, and so come and check me out then. And thanks for watching today. I really appreciate you watching the show. I know it gets a little wordy reading that whole email thing this morning, but I just wanted to show you kind of what the emails are about. I find it definitely interesting, and you know, getting it to your email box is more interesting than listening to me read it, of course. Okay, anyway, thanks for watching, and I will see you again tomorrow.
I know your eyes in the morning sun. I feel you touch me in the pouring rain. In the moment that you wander far from me, I wanna feel you